Hawaiʻi, home is here.
Local broadcasts of Insights on PBS Hawaiʻi are made possible by the support of viewers like you. Mahalo, and by Carl Smith Ball, providing legal services throughout Hawaii and the Pacific since 1857, making a positive difference in the communities where we live and work. Whether it's a natural disaster, a fire, or a flood, home insurance is a financial safety net for large losses that most people could not afford on their own. It's essential to have because you never know when you'll need it, but Hawaii residents are feeling the pain in their wallets as home insurance premiums skyrocket. We're asking state lawmakers what they're doing to address Hawaii's home insurance crisis. Tonight's live broadcast and live stream of Insights on PBS Hawaiʻi start now.
Aloha and welcome to Insights on PBS Hawaiʻi. I'm Daryl Huff. As if the price of paradise wasn't high enough, many of us, especially condominium owners, are now facing dramatically higher home insurance rates. Nationwide, natural disasters and the possibility of more fueled by climate change are reshaping the business, leading to soaring premiums, policy cancellations, and limited coverage options. The crisis is not limited to Hawaii, but with our housing market already unaffordable, state leaders are scrambling for possible solutions. We look forward to your participation in tonight's show. You can email or call in your questions, and you'll find a live stream of this program at pbshawaii.org and the PBS Hawaiʻi YouTube page. Now to our guests. Representative Scot Matayoshi represents District 49, covering Kaneohe and Moanawili, and is the chair of the Committee on Consumer Protection and Commerce. He's a former public school teacher with a law degree from the University of Hawaii. Jerry Bump is the state's acting insurance commissioner for the Department of Commerce and Consumer Affairs Insurance Division. He's worked in various capacities in the insurance industry for more than 3 decades. Alex McLaury is an insurance agent with the ACW Group in Honolulu, originally from South Dakota. He's a graduate of the University of Hawaii at Manoa. Last June, he was appointed to serve on Governor Green's insurance task force. And Greg Misakian is a member of the Waikīkī Neighborhood Board and has served on his Condominium Association board as director and treasurer. He's also the first vice president on the board of directors for the Kokua Council, a nonprofit focusing on elderly advocacy. And let me start with you, Greg. As a condo owner, tell me a little bit about your experience as a board member when your guys' insurance came up.
So I purchased my condominium in 2019. And when I purchased my property, the condo insurance for the entire property was, the master policy for the condominium association was about $118,000. We are currently at $750,000. And progressively what was happening over a couple of years early on, we had some water leaks, we had waste pipe damage, the cracks. These waste pipes are, they're established as being defective because they are early life failures. So we have cast iron pipes throughout Hawaii. And what's happening is they're supposed to be surviving for about 100 years, and unfortunately they're only lasting for maybe 50 years or less.
Is that the primary driver of why your insurance is so high?
That's why it started to go up. So we went from 118 and then it doubled and then it doubled again year on year. And only in the last couple of years has it really you know, it's actually stabilized. So it went up severely when we had the water leaks and continuing water assessment.
So what does that do to your how big a component is of your maintenance fee?
So when I purchased originally our maintenance fee, my maintenance fee was $570 in 2019. I currently pay about $1,150, and we have no amenities at my condominium association.
And I'm hearing that's not bad, is what I'm kind of hearing. Alex McLaury, as an insurance agent, you're the middleman between these condos and the companies. What's going on across the market?
Yeah, I mean, that's, to your point, that's been a big driving factor pre kind of the catastrophic event that occurred last year, or coming on 2 years now.
You mean the wildfire?
Yeah, exactly. The deferred maintenance has been a large driving factor in a lot of insurance, especially high-rise buildings. Seeing that increase year over year just because of those water claims kind of trickling up a single claim that starts in a
Trickling
unit.
up.
Yeah, I mean,
Well, let me understand though. So if I'm in a condo and the water system's bad, why would everybody have to pay more for insurance? Why wouldn't just individual owners be responsible for the damage there? Why is that something that has to be shared by all the owners?
the master policy is a common element cost. So whether it be something that is, for example, like everyone is a unit owner of that association, so they have right and entitlement to that insurance policy. But then also on the flip side, if there is damage that comes through, it is a common expense that is incurred. So it's kind of, you live in a group environment, it's kind of shared within everybody, and it's the reality with living in a high-rise condo or townhome.
Let me ask Jerry Bump, what kind of numbers are you hearing when people complain to you about the kind of increases that they've been seeing?
So
We're talking about condos now specifically.
No, so we started seeing significant uptick in information coming to us. So at the division, we don't really hear what's going on in the markets like Alex would until it's already at that crisis level. So near the end of 2023, we actually got contacted first by banks telling us we have all these buildings that are underinsured or don't have any insurance. And it was a result of the escalating prices because these buildings are getting their insurance from companies that we don't license. The majority of them are. But what we were hearing was at the peak, which was about June, July of 2024, so about 9 months ago, that was, I think, the peak, and maybe Alex can confirm that, but we were hearing anywhere, on average, associations were seeing anywhere from 300 to 500% increases in just 1 year. Some extreme examples, we heard of one complex that had a premium of $380,000 the year before, and it went to $3.2 million the next year.
Ouch.
So that obviously is on the very extreme side, but even 300% is very extreme.
How does this become a state issue? Scott Matayoshi.
Well, is that because they're going from admitted carriers to surplus lines? Is that the main cost driver for that?
No, I think, and maybe Alex can confirm, I don't think a lot of the buildings were already utilizing surplus lines market. It really comes down to this concept of reinsurance. And the reinsurance market was getting severely impacted by natural disasters.
Okay, let me go to Scott again. So you're the one who has explained this to your constituents. How do you explain the reinsurance versus the surplus lines of insurance? You hear all this. What's the difference? What happens when all of a sudden, what does a surplus line mean?
Well, I mean, if the constituents give me 20 minutes of their time, I can explain it. Really quickly, I mean, you have admitted carriers whose rates are regulated by DCCA.
By the state.
By the state. And if you can't get insurance by the regulated insurance industry, you have to go to kind of the Wild West of surplus lines where there are very few rules, if any, and they can charge you kind of whatever they want, whatever the market dictates. I'm not saying that there's only one surplus line carrier and they can charge you whatever they want, but the rates there tend to be much, much higher. So it becomes a state's problem because we care about our constituents, we care about our people, and we want people to have an affordable insurance rate. And the only real way I see that happening is to bring people back from those surplus lines carriers back into the admitted market. And that's fairly difficult given the condition a lot of the condo buildings are in. We'll
get a little bit more into the nuts and bolts of that in a little bit. I'm going to ask Greg, though, how did you guys, you say it's stabilized, you finally found an affordable, quote unquote, affordable plan, and how did that get put together?
Yeah, we're lucky that we didn't get a huge increase this past year, but we did get a pretty substantial increase. But the problem is we have a lot of deferred maintenance that is not being addressed. And so to give an example of where you have insurance, we have the insurance, but unfortunately we can't use the insurance. So we have a situation where we have an owner who has damage to their property from water intrusion from our roof. The roof has not been repaired for many years. There was repairs needed that should have been done years ago. And unfortunately, they've already utilized their insurance to repair it once, and now we're repairing it the second time. But because our deductible is $50,000 and the work is about $60,000, we're not going to file a claim. we're not going to be able to use our insurance.
Just hit your
And it
members with a
goes right to
special
us.
assessment.
Yeah, it goes right to our pockets.
Alex McLaury, explain to me the relationship between deferred maintenance and if a condo has, how do an insurance company know what the risk is from deferred maintenance? Do they come in there and inspect, and how do they know?
Typically, it's pretty evident on the loss ratio or the claims history. So anytime an insurance carrier is looking at writing a building, they're going to always ask for, let me see your loss runs. And those loss runs will show kind of evidence of...
What's a loss run?
It's your claims history for your building. So it's your track record over the last 5 years.
So the more you use your insurance, the more likely you're going to lose your insurance.
Basically, it starts to show a list of the number of claims you had, and if it's something where it's water claims, a building could have 1, 2, 5, 10 in that course of that policy period. And as long as it's in that policy period, by contract, they pay it out. But renewals is where they start to get hit with the non-renewals.
So, Jerry, from the insurance commissioner point of view, I know that state government has lots of, I'm not accusing you of this, but silos, right? You guys are in insurance. By the time an insurance claim has gotten out of hand, the deferred maintenance thing has happened a while ago. And you're not responsible for making sure condos get their maintenance, right?
Correct.
So what's the state's role in this balance between maintaining a building and the ability to get insurance?
So within DCCA, there is a what we call a real estate branch, and they are responsible for enforcing the regulations that are under their purview as it relates to condominiums. There's certain things that have to be filed with them, but in reality, they don't really have a lot of enforcement ability. And some of that comes back to, a policy decision. How much do you want the state to regulate condos and the condo boards and the condo management companies and making sure that they keep up? And to be honest, our state has operated under a model of self-governance, that each board of each association is responsible for maintaining those properties. And unfortunately, insurance is sort of the symptom of a bigger problem, like Greg is mentioning, of deferred maintenance, right? When you defer your maintenance and you start to experience a lot of losses, like Alex says, then the insurer always has a choice. Do I want to issue coverage to this building? And if this building is experiencing loss after loss after loss, they're just not going to want to insure that building.
I understand it, and we'll explain to our viewers that, a lot of people have thought that it's the wildfires. So when you hear this conversation, sometimes you go, oh, that's completely different from what I thought. And Scot Matayoshi, the legislature, I think I recall there being some discussion about helping condos catch up with their maintenance so they could find affordable insurance. Is that part of the process of solutions that are being discussed?
Yeah, that's definitely one of them. And I introduced a bill to do just that, to create a loan program for those condos that can't get a normal commercial loan because they're so underwater already. Give them that loan, allow them to do the deferred maintenance. In fact, just really the important deferred maintenance that they need to catch back up so that hopefully insurance companies will look at them as less of a risk. I talked to pretty much every insurance company I could talk to, both here and on the mainland, all the brokers. The thing that kept coming up was water loss. It was repiping, it was old pipes that are bursting, creating a cascading effect, a literal water cascading effect, damaging units. It was the lack of sprinklers, creating fire risk. So those two things tended to be the largest impacts on whether a building could get an affordable insurance rate or not. So the loan program that I set up in my bill is to allow the state to give those condominiums loans to specifically repipe and sprinkler their buildings. As they repay that loan over time, the thought is that if their insurance rate comes down, that surplus will be used to pay back the loan. And also the unit itself will gain significantly in value because it'll be now a unit with new pipes, with sprinkler systems that is more valuable to sell and own.
Do you have any idea how much you'd have to have in that loan fund, given how many condos we have?
That is certainly an issue. My initial thought was about 500 million would do it. But I've talked to
$500 million.
we have a lot of condos that we think are going to be interested in this program that can't get traditional loans. But honestly, as much money as we can get, if we do get less money than we can, if we can't service everyone, if we can't offer everyone a loan because we don't have the capital for it, I think we are going to have to put a system in place to make sure that that money gets to the most needy condos.
Prioritizing.
That are going to get the biggest bang for their buck.
Let me ask Greg Misakian, did you folks go through the process of trying to upgrade the building?
Yeah, we have.
What does that look like?
We have 2 loans. We had taken out a $5 million loan a number of years ago to
How many units in your building, by the way?
183.
And it's a high-rise?
It's 2 buildings that are connected, and it's a high-rise, 18 stories on one side, I think 16 or 17.
Oh, those are big building.
Yeah.
Okay, so you have 2 loans, one for $5 million.
One for 5, one for 2 that we just took out recently. The $2 million loan we're still tapping into. There's projects that have been deferred. Part of this too, I'd just like to introduce another element of this is DPP. So when you go...
Department of Permitting and Planning. Yeah.
The Department of Permitting and Planning, when you go to apply for a permit and you have to wait 6 months, a year and a half, the maintenance gets deferred even more. And unfortunately, what's happening is projects are being done without permits. And this is kind of a pervasive thing across the island.
Okay.
Then they get done improperly.
Sounds like another show.
Yeah. They get done improperly, but it adds an element to the insurance issues.
Because I would imagine the insurance company will go, I don't see the permits for this, and so they're not
Yes.
going to, it's not going to fix that part of the problem.
Yeah.
Yes.
Let me ask, though, Alex McLaury, what kind of costs are you seeing for these repair projects? I mean, you've been dealing with these condos. You were shaking your head in approval of the idea of getting these improvements into these condos. Does it work out that if you spend the money here, you're going to save it here? And what kind of money does it cost to rehab the water system in a condo?
Yeah, I mean, to your point, I mean, it's going to be millions of dollars, especially for these high-rise buildings. It's a large building. It's a lot to take care of. The investment in that building is going to be way more served actually repairing the building itself than paying for more exorbitant insurance costs. So I always tell any of the HOAs that I work with that even if you aren't in a non-admitted carrier or surplus lines carrier right now and you are paying that $700,000, you might be one of the ones that are still paying the $100,000 or $200,000, and if you put that $500,000 towards capital improvement, that's just an investment that's going to only protect your building, but it's also going to protect you from going into that surplus lines market. So it's not always the easiest decision to make to raise those maintenance fees, but it's an important conversation to have as a board to realize this is an improvement, a capital improvement that is going to benefit everybody for the long run for this building.
Back to Scott and also to Jerry Bump. What is okay, so that's one aspect of the solution here is providing money to condos that need loans so they can get upgraded. And it's their financial call, right? I mean, that's the call of the board. Mm-hmm. Mm-hmm. And so what other elements are there in the solution for the condo side of the insurance other than this loan? Scott or Jerry?
I can jump in.
Sure.
So most times a building has 2 parts to their coverage of their master policy. One is basically mostly all perils other than hurricane. The other part is hurricane. And typically the hurricane piece represents about 40% of the overall premium. And so a lot of those huge spikes we've seen in the last 2 years are related to the hurricane or what they call catastrophic coverage. A lot of that has been driven by disasters worldwide. Those disasters worldwide are being covered by what's called a global reinsurer. So most of these insurance companies, when they write you a policy, they're not keeping all that risk. They choose to what we call cede or send some of that risk to a global reinsurer. So those global reinsurers,
they basically hire someone else to take on that risk.
They want to spread out the risk, right? They don't want to keep a concentration of risk just like everybody else. So one of the things is, back in the 80s, the 90s, the year 2000s, we had maybe, adjusted for inflation, we probably had an average of 5 to 6 events per year that reached over $1 billion. In the last 5 years, we've averaged 23 events that have gone over $1 billion.
In Hawaii?
No, U.S.
Okay. I was just saying.
And we're only talking about
I
U.S.
usually know about those.
We're only talking about U.S. and globally, I don't know what the numbers are. But those reinsurers are insuring the
I
world.
see. So it's those
they're
costs over
charging
there,
the
yeah.
insurance companies more for their reinsurance, and then those insurance companies are having to pass along that cost to the consumers,
Okay,
the
so
policyholders.
back to Scott. Go ahead.
And another part of that, because the reinsurance costs are growing so much, local insurance companies that I've talked to have begun to realize they just don't have the capacity to insure so many people, because the cost to insure a building now is so high that they may not be able to keep all of the buildings that they normally had under their coverage, because they only have so much capacity or so much cap for the reinsurance that they bought. So one of the things that we're trying to do is to restart both HHRF, the Hawaii Hurricane Relief Fund, and HPIA, the Hawaii Property Insurance Association, to have the state step in as sort of a insurer of last resort. But part of that is to add capacity to the market. So if you can't get insurance policy through any of the admitted carriers, you can turn to the state's insurance market, which I'm not saying it's going to be cheap, but at least we'll add capacity to the market. Now, the long-term solution to that is to attract mainland insurance companies or companies that aren't here yet to come into the market, to expand that capacity, and hopefully to get some of our local guys to go and come back into the condo market too, who might offer auto right now, but may be able to offer home insurance as well.
Let me ask this question though, I've got questions here I want to get to, but you guys are actually answering a lot of the questions that have come in. Why is it that I, as a taxpayer or and a single-family homeowner, and I don't mean to sound selfish, why should I bail out these condos? Right? What's the interest to me as a single homeowner in bailing out these condos? I feel badly for them. I wish it wasn't going on, but they're the ones that made the decisions that led to the condition that they're in. What is the state's interest in stepping in?
Well, I mean, our housing market is terrible right now. A lot of these people, they're living in condos not because they love condo life, no offense, Greg, but because they can't afford a single family home. So we're talking about people who, if they can't afford a condo, they might be on the verge of homelessness here. And as a taxpayer, not as a single family homeowner, but as a taxpayer, that should be everyone's concern. If we push people into homelessness because they can't afford their condos, it's not like we have a huge surplus of housing. We have the opposite of that. So if we don't keep people in their condos because they can't afford it, we're going to be paying one way or another, whether they're living in a condo or whether they're living on the street.
So that's well said, and I don't mean to sound hostile, but I think that's a fair question.
And I can
Go
just
ahead.
add, Daryl,
Yeah.
that none of the bills that I've seen are like direct subsidies, like giving state taxpayer dollars to the condos that are in trouble. These are loan programs. Yes, maybe low interest or no interest. Even the hurricane fund that's getting back up and running, it had existing money left over from when it was active back in the 90s. They're going to repurpose that money and provide coverage, but it's still going to be have to pay premiums. They're just going to act as an insurer. They're going to have to pay premiums out of that, to that fund. The money that's in there can go and buy reinsurance and help provide more coverage to more associations.
Okay. A couple of questions have come in on this specific thing. And I might have to repurpose the questions a little bit, but can anything be done about all those condos on the blacklist? I guess that's people who can't get insurance. A lot of condos here aren't insured, so people can't get conventional loans. I guess some condos can decide just not to be insured and then not raise the HOA fees. The other condos are seeing triple increases. HOA fees are ridiculous. It's so unaffordable. Another question is regarding deferred maintenance. Isn't that negligence on the part of the responsible party and subject to legal action? So I think the overall question is, can you go uninsured? And I guess the big reason you don't go uninsured is because you can't sell or people can't buy in your building.
Yeah,
If I-
the blacklist, I think, is referring to the banks. So the banks have a list of condos they don't want to issue loans to, because if they issue a loan to that a unit owner in that building, they can't sell that loan to Fannie Mae and Freddie Mac because the building is not 100%.
The federal regulator, the federal banks.
They're the federal banks, and that's how the banks lend money, is that they can issue a lot of loans because they can sell part of those loans or all of those loans to Fannie and Freddie and then keep issuing more and more loans to our local community members. So Fannie and Freddie require 100% of the building to be insured. And so if the building's underinsured or uninsured, then those institutions that issue loans don't want to, they're kind of feel restricted.
Yep.
And there's also an inherent risk on insuring a building to a percentage of the total value of the property. If you only insure your house to 10% and you have a total loss, you're only getting 10% of that premium or that limit back to you.
By law, can you do that?
No.
Can you purposely underinsure? Go ahead.
Technically, yes.
There's another element of that. To answer that question, the governing documents of the association typically establish that you have to fully insure the project. So if that's a requirement in the governing documents, that question is spot on, because yes, that's the responsibility of the board and the management company to kind of oversee and make sure that that's happening.
Is that kind of one of the reasons we have so many lawsuits between boards of directors and their members?
Yes.
One of the reasons.
Yes.
I will stipulate that there is, in 514B in the statutes, there is a requirement of 100% that the boards should maintain. However, there's
100% of what?
Should have their building insured up to 100%.
For total loss?
For total loss, yeah. So that would be keep them in compliance with the Fannie and Freddie and the bank requirements. However, there is a caveat that if in the bylaws they can edit that, they can reduce it.
They can
The board itself can choose to be less than 100%.
I was kind of surprised by that, because I remember after the Maui fire, we were hearing about underinsured condos in Lahaina, and then we heard, oh, there's a requirement that you have to insure for complete loss, total loss. And I always thought that was because the fire burns down the whole building. That happens very, very rarely. But this requirement that you have 100% insurance is it because it could all burn down, or it could get blown up, or why would you require 100% insurance when it's so rare that a building burns down in its entirety? Can you help me with that, Alex?
Yeah, I mean, it goes back to what Jerry was saying. It's, excuse me, it's Freddie and Fannie. That's kind of where the whole conversation starts.
It's the banks.
Because Freddie and Fannie require 100%, everything is just following form of what they're requiring. Because if you can't loan in the building, then people aren't going to be able to sell. And there is an inherent risk that, okay, it could happen. So it's they look at it as, well, we're going to try to mitigate any of our potential losses and just say you have to do it 100%.
Okay, so another question from a viewer about the trouble that people are in, from Richard in Kailua. There are a lot of foreclosures on condominiums. Does this have anything to do with high insurance? Anybody?
I could probably answer that a little bit. We have a litigation at my condo association, but I'm not going to discuss. But what's happening with the foreclosures, some of it may be related to insurance, but I think a lot of it is just related to people aren't being able to pay their maintenance fees. So if you don't pay your maintenance fee,
well, then you get foreclosed.
Then you get foreclosed. It's for various reasons, but clearly, as I mentioned earlier, my maintenance fee was $570 and it's $1150 right now.
Let me wrap this part of our discussion up, because I think we need to get into fire because of the Lahaina fire. Maybe that's less of a conversation than I thought, because we've had this conversation. But if I'm a person in the market for a condo, what should I be looking for to avoid walking into a mess like this? Scott, how about you?
I would think this
You're
is
pointing. Okay.
But I could, I mean, if you're in the market for a condo, this is not my area of expertise. But just having been in this area for a little while now, I mean, I would certainly be asking kind of the same questions an insurance company would be asking. How many losses have you experienced? When's the last time you re-roofed? When's the last time you fixed any piping? Just try to figure out what kind of risk you're buying into. How much has your insurance increased over the last 5 years? And that would be very telling about the nature of the building.
Do they have to tell me all that, Jerry? I mean, is there a law somewhere that says they have to tell me if I'm a buyer?
So during that, I guess I'm not a real estate expert, but I guess the exploratory phase where you get the condo docs, the main thing that I would look for is, what does the reserve look like? Are they starting to put money away towards these big capital improvements? Because, I mean, if you're not putting it away now, something's going to break in the future and you're going to have to pay for it. And the way that's been paid in the last couple of years, especially for even insurance, is special assessments. So are there any special assessments on the table? What, if they are, what are they for? And that will kind of give you the look at how that condo is operating.
Is there a way of knowing that the insurance is already as expensive as it's going to get?
Well, I think that's a good question, and I think we're seeing positive signs of the market starting to self-correct. So there was this really big, huge overreaction that occurred between 2023 and 2024, and we're starting to see it come back down in 2025. However, it'll never get back down to where it was pre-2023. And there's many reasons for that. I mean, if you talk to kind of the agent community, they'll say prior to 2023 and 2020, 2021, the premiums that people were paying were well below national levels. Like Hawaii's market was paying very cheap. So that's what exasperated having even this super huge jump, was they were already starting really low, and then all these factors kicked in, like inflation, natural disasters and reinsurance costs, things of that nature. But we're starting to see the reinsurance markets, again, that's where a lot of it is driving on the condo side. They're starting to bring their rates down. I don't know if Alex has any examples of
Oh
that.
yeah, I mean, you're exactly right. So in the insurance world, we call it a hard market. Hard market just means, okay, lack of capacity, premium increases, so it's harder to get insurance. So that peak hard market was undoubtedly between about April of last year till August. So in between those two time periods, in order to get an insurance policy for a building, say $50 million wood frame, you're not looking at one insurance carrier, you're looking at probably 10. So just the amount of association with the administrative costs, trying to get 10 different insurance carriers to actually offer up $50 million, either at $2.5 to $5 million per layer, just adds an inherent cost. So what we're seeing now is aggregates going up per carrier. So instead of 10, you're now doing it with 4 or 3 or 2 or 1.
Scott Matayoshi, my assumption would be if you're buying a condo, you have a real estate agent. Is there any law that says those real estate agents have to do this due diligence for you? If they don't and you end up walking into a mess, do you have any action you can take?
This might be more of a DCCA question.
Not the insurance
Yeah, wrong
but
department.
sorry, I'm
that's
not
fair.
sure.
Whether I would say find a good realtor. I'm honestly not familiar with exactly what process
What
they go
laws?
through
Okay.
for that. Yeah.
What would you advise someone who's trying to buy a condo?
So since I bought recently, not that long ago, the disclosures you get are limited, and they're not always 100% accurate. And I do have experience recently where an owner was trying to sell at my condominium association, and he was requesting the disclosure documents, and he was requesting and requesting. Eventually, what he got wasn't all of the answers. So
well, given the state of your building, it doesn't surprise me.
and the real estate agents are, they're trying to sell the property, so they're not always being forthcoming with all of the information. I've seen them actually blatantly lie about things on their advertisements. I've even watched commercials on TV for properties where they blatantly lied, even for a condo at my building. So it's very concerning.
It sounds like another show.
Yeah.
Okay, so having maintenance fee tax deductible may solve some of the high insurance issues, but it cause other issues, I would guess.
I mean, making anything tax deductible, you're going to pay for it one way or another. You're not going to pay for it now, but we're not going to get that tax revenue, and we're going to need to get it. We're either going to need to get tax revenue another way, or we're going to have to cut other programs. It's kind of a zero-sum game.
Another thing that just occurred to me, and I don't know if this is correct, but it was when that condo tower fell down in Florida. Mm-hmm. Was that sort of use the pun, a watershed for the insurance industry? Did that also like kick people in?
That had insurers reassessing their appetite to issue coverage for these types of structures, for sure. So that's why we're down to only 3 companies that are actually licensed in Hawaii that actually want to write this coverage. And even right now, like Alex alluded to, their appetite for how much they want to write in each building is usually not the entire building value. So most of these buildings, they might get a piece from the admitted market or the licensed market, but the rest is coming from that surplus lines market.
Okay, let me shift now. Melvin called in months after the Maui fires in 2023. Excuse me. My home insurance carrier told me it would not be renewing my policy. I live on the Big Island. I found a new carrier, but at a higher rate. This is scary. Help. What's going on with the fire side and single-family homes now. You don't do single family so much, or do you?
Here and there.
What's it looking like?
I would say the rates are increasing from all accounts I've heard. Sounds like most of them are. I mean, a lot of the single-family home markets are admitted, so they are sending to the insurance carrier to say, hey, this is the amount we need to pay for it. Because just like the commercial policies for an entire building, those single-family homes are still selling off that reinsurance to reinsurance carriers. So they're still being affected by that increased reinsurance cost, which...
So once again, just so people understand what you're saying, is that even if I have a single family home, my insurance company is still contracting with the reinsurance companies who are dealing with the condos and with the fires and natural disasters and stuff. So that's affecting.
I think a good kind of analogy, but a statistic of seeing how interconnected that reinsurance market is. There's roughly about 20 reinsurance carriers in the world that insure about 80% of total risk. So it's a vast pool of risk that kind of spread across all of the industry. And that's why here locally we feel those reinsurance costs increase down in Florida if there's major wildfire or hurricane that hit there, or the deep freeze in Texas, wildfires in California. It's all interconnected.
So if
If
somebody
you don't mind,
no,
I'll
please.
just chime in, Daryl.
Yeah.
So also on our end, so like Alex alluded to, in the single-family home market, we have enough admitted carriers. So most, not all, but most.
It's the locally regulated carriers.
Correct.
Right.
And so they have to file their rates with us. They've been complex and rather large increases, and we have to look at them and we have to justify that they're adequate, not discriminatory. And the last one is not excessive. Now, excessive doesn't necessarily mean affordable. It just means that they're not charging an excessive premium to generate excessive profits. So there's times where rates come in and file and we push down on them, and we go back and we say, we're not going to grant you this. You want an 80% increase, we're only going to authorize 35%, or whatever our actuaries, look at their rates. So that is occurring. Just to finish that thought real quick.
Sure.
On the condo side, like I mentioned earlier, you're seeing 300, 500%. The single family homes are going to start seeing 60%, 70% from times. Some of it is a catch up because it takes longer for them to get their rate approval through us. Some of it is on that hurricane piece. Most single family homes, again, they'll get their base coverage and then they'll get the hurricane coverage with it. That hurricane piece is similar on the condo side, is that they're paying to those reinsurance premium companies those premiums and have to pass it along. So a lot of our increases that we've been granting have been related to that hurricane piece.
Because it goes to the reinsurance companies.
It goes to the reinsurance companies.
So I just want to make sure, because for the viewers, I want to make sure. I don't think that they even know that the insurance division approves or rejects the rates of the homeowner insurance companies here. So if someone gets what they think is an excessive bid or a big increase, are you the folks they should turn to?
Absolutely. They can turn to us and they can say, hey, did you approve this, and why did you approve this? You can call in. We can look at it, make sure it matches with the filing that we approved. They can reach out to us.
So you wanted to
Just wanted to add one thing to this. For condominium associations or condominium living, you don't just have the association's master policy. The individual condominium owners have policies, and so there's many more providers for that group, and those rates are starting to go up too, but they're considered individual homes. So you're really getting hit twice when you live in a condominium. You've got to pay your HO6 policy, required to pay it, and then you have to pay a contribution towards the master policy.
Isn't like condo owners individual policies though? Isn't that like an optional thing?
No, it's
have to have
typically required at most associations. You have to have a policy.
I'm getting mixed up with rental insurance.
Correct.
That's different.
That's a different thing. Okay, how much has wildfire affected these rates? The Maui wildfire specifically, and now we've got the California wildfires.
I'll start in on the individual homeowners policies. We get that question a lot. So when those rate filings come in, we specifically tell insurers you can't include the losses from Lahaina. The reason being is we view that as a one-time event, right? It's not something that's going to reoccur on a normal basis. You can't put that in.
So you can't set a rate based on what happened on Maui?
Correct, to some extent. So, but what ends up happening indirectly is when they go and try to get reinsurance, the reinsurer takes into account that now Hawaii is on the map for wildfire risk, and we need to charge more because there is potential there for other communities that are prone to wildfire risk. And so ultimately, that portion of the rate that they have to pay for the reinsurance, we do have to grant. But direct losses, they can't come in and say, hey, I lost, whatever it is, $100 million or $1 billion, right. And now I need to raise my rates one for one. We don't allow that.
But they don't, so you're not really requiring Hawaii to pay for all of Hawaii losses. They have to, I'm not putting this right. Hawaii is not just a self-insured little market. We are influenced by all these global factors.
Absolutely.
Scott Matayoshi, when it comes to the fire impact on Hawaii insurers, what have you been hearing at the legislative level about what has to be done about fire-related insurance? Is there any action on that?
Nothing in particular on fire, because again, if we're talking about what the biggest effects are on the insurance rate, a lot of it's not fire, a lot of it's water, a lot of it's repiping, a lot of it's a leaky roof, like Mr. Misakian was telling us about. So fire is definitely a factor. We have quite a large bill coming through to try to help HECO mitigate its risk of wildfire.
So that's a whole separate situation.
Yeah.
Okay, tell me a little bit more about that. Where are we now? Because I know that that's controversial. I think there's differences between the House and Senate over how much taxpayers or regular ratepayers should be paying to help Hawaiian Electric through its hardening process. But that's not so much an insurance issue. That's an issue about taking care of protecting HECO.
Yeah, that'll be a whole nother show as well. I promise you that.
Okay.
But I just know that we are taking steps to try to mitigate wildfire risk ourselves by trying to direct HECO to do wildfire mitigation and to fund wildfire mitigation. So hopefully that will somewhat reduce the risk of fire and will be reflected in people's insurance rates.
I was going to say, you say it may not be an insurance issue, but from an insurance perspective, anything our community can do to build in resiliency and mitigate against risk, whether it be proofing your home against fire risk or putting on hurricane clips and installing windows and things of that nature that will harden your property, insurers will like that. And then that could attract insurers to come back into the market and write those risks.
How much does that work for? Oh, go ahead.
I'm sorry. On that note, I remember talking to Sue Savio, and one of the things she did to help.
She was a commercial real estate person.
Yes, and very knowledgeable in the market. But one of the things she described as doing for some of her condo clients was that she had them list all of the maintenance that they had been doing, when the last re-roofing was, repainting, just everything. And she took that list to the insurance company and said, look, this is a responsible condo. Look at all the things they've done over the years. And she's actually been successful in getting insurance companies to say, okay, you know what? They've been taking care of the deferred maintenance. We'll lower their rates. So
well, there's definitely an incentive for the insurance companies to do that if they could, especially do it across the market.
Oh, certainly. But if you're putting hurricane clips on your property, on your roof, if you're trying to mitigate the risk of wildfire spreading by cutting back brush, if you're repiping or re-roofing or taking care of your building and repairing spalling, certainly let your broker know so that they can use that information to try to get your insurance rate down. I think there are ways that homeowners can affect their homes or condo owners can affect their condos that can directly affect their insurance rates. But if they don't know about them, then they might as well not even happen.
So I could go to my insurance company and say, hey, I just got fancy new windows and I got I cut all the brush around my house.
Or I would check with them first, find out what kind of discounts and mitigation.
Don't do the work first.
And it won't be dollar for dollar, right? It won't be. It may cost you $20,000 to put on a new roof. It may save you $1,000, right? Over the but it's better than having to pay an extra $1,000, and you do have a brand new roof and less likely to have a claim.
Less likely to have your house burned down.
Right.
Yeah, which is a good thing too. Okay, I've got a pile of questions now. Again, we're mostly going back to the condos again. This point that you made about permitting and the time it takes, if a condo says, I'm going through the process of fixing this thing, will that get their insurance down right away so that they can have money to do the fix? Or does the insurance company usually wait and see that it's done?
I think it's more situational. It's kind of a conversation. How has that building looked over the past 5 years? Have they had millions of dollars of claims, and now they're looking at doing the repiping, or is it something that they are doing a little bit more proactively, and they've only had one and said, okay, we really need to get this done, then let's start doing it now. So I think kind of like what you were saying, having that conversation with your broker, keeping them in the loop on whatever you're doing for the building is really crucial. That way the insurance carrier knows that, hey, we care about our building, we want to maintain it, and we want to do everything we can to make sure that it's in the best working condition.
I'll just add, Daryl, too. I mean, the carrier is only insuring you for a 1-year period. So if that whatever they're trying to fix isn't fixed in that year period, the insurer is still underwriting a risk that hasn't been repaired, right? So they need to, there's going to be, just because they have it in the plans to fix it doesn't mean that it's lessened the risk, and they need to charge the appropriate premium for that risk.
You know, that brings up a whole other question for me. Why is it that everybody's only insuring for 1 year after the next year after the next year? I mean, I would think that
Well, they'll
for them and for me,
yeah.
well, but I'm just, why do we have to go through this every year? Why can't we buy insurance coverage for 5 years if we're a relatively new?
Well,
I think that was
could
the
I,
essence of insurance.
could I interject just a comment? So for the master policy, it's an annual review, but for the HO6 policy, I think it just gets recirculated. So every year you just get the bill, and unless there's a change to the policy, so you don't have to renew or go back to them. But for the master policy for associations, you do have to do a review with your agent and with the carrier usually each year.
Yeah, I just feel like for a very big building, nothing's going to change dramatically in 1 year.
That's not what we've been seeing. Yeah.
Look at the building in Florida that fell down.
Yeah. And that was due to a lot of deferred maintenance too, installing, and they were actually planning on fixing it, and they just didn't get to it before the building collapsed.
That was one of the
collapsed.
scariest things I
Absolutely
ever saw.
frightening.
Yeah, especially when in a coastal community with global warming and.
Lots of salt air.
We do have a question there about how we think that, how much you folks think that the climate change is going to be affecting insurance throughout the world. Anybody want to bite on that one?
I mean,
I'll make you do it, Alex.
I mean, I think kind of to the point that you were making earlier, it's kind of the evidence is in the amount of claims that have been occurring over the last 10 years. I mean, previous to 2020, if you look at the national average of that 10-year period, is around $40 billion annually within the U.S. Since 2020, it's been at or above $100 billion just in the U.S. alone. So we're seeing that uptick of more intense storms hitting Florida that is causing tens, if not hundreds of billions of dollars. So it's kind of evidence that there are more and larger claims occurring more frequently.
Looking ahead, though, I mean, do they look ahead, or they just say, "Oh, this has been happening more and more. Boom, here's the new number"? Or if it gets worse, Jerry?
Yeah. So insurers, if we just focus on the cat risk or catastrophic risk, and in Hawaii, our main catastrophic risk potential is hurricanes. They use modeling, and that modeling is updated all the time to take into account. And in insurance, Alex touched on it very well. We really look at two components. It's frequency and severity. And we've been obviously seeing a great number of storms and more severe storms. So fortunately, knock on wood, in Hawaii, we haven't been affected directly by a large hurricane since Iniki in '92. But the models still are forecasting, and there's still a significant risk there, and we're definitely worried about that.
This is a question for Scott. Linda in Pearl City, live in a townhouse, retired, rates increased from $400 to $760 per month. How can they keep charging higher fees? Will this continue? It sounds like we've talked a little bit about that, but is there a safety valve? Like with property taxes, if you get to a certain age and you're fixed income, you can apply for an exemption. Is there a way for government to help people stay in their condos if they're facing these incredible rates on fixed incomes?
First, I have a lot of sympathy for those individuals, because you're right, a lot of them are on fixed incomes. A lot of them don't have anywhere else to turn, really. I mean, again, you're not necessarily living in a condo because you hate single-family homes. You're living in a condo because it's the affordable option. That being said, a lot of the people we get a lot of people calling the office asking for government subsidies, government grants, government money, and don't think that it's necessarily appropriate right now for the government to be using taxpayer dollars to fund private individuals' insurance. What I'd like the government to do instead to help people like Linda is to allow them to fix their condos in such a way that the insurance will naturally come down. It's more of a long-term solution. I think if we gave people $100, $200, $300 a month to subsidize their insurance rates, it's not going to make the insurance rates go down. The problem is going to persist or maybe even get worse. That's not the solution. I'd rather use the money, if we're going to be using government money, for loans to condos to actually have them fix the deferred maintenance for long-term solutions, so that not only Linda, but the person who's going to be living in her condo after that, and then the person after that will still have a condo that's in a good state of repair and will get reasonable insurance rates.
This is a really good question. Now I understand this question better. It was one of the early questions. Now I get it. Why doesn't the state self-insure all the homes in Hawaii? I mean, if you look at the state would have to buy reinsurance. We did it before with hurricane. You know, why not? I mean, would taking the profit motive out of this, and is that a possible solution? You're looking skeptical.
I mean, it would be an astronomical number.
I was going to say the exact same words, astronomical
But the money's
number.
there. People are paying the money.
Yeah.
It would go to the government
It
instead
could
of
work, but you need, maybe we need someone like Alex here to spearhead that, and Jerry.
Yeah. I mean, in certain circumstances, like the FAIR Plan in California, that is the state that is insuring.
That was one of the
homes.
questions I got. Has any other state figured this out? So talk about California.
Well, I mean,
The answer is no, but
figured it
here's
out
what
is the
they're
right
trying, right?
so I mean, it's kind of the principle of insurance, which is just law of large numbers. You have to have a spread of risk. So if the entire state is assuming the entire risk of Hawaii, and they have all of their eggs in one basket, one hurricane comes, that would basically wipe out the entire amount of money that we would have in one go. That's why insurance companies like insuring here in Hawaii, and then also in California and Texas, and so they want that spread. So if something does happen, it doesn't completely drain them of all the reserves that they have to pay for a claim.
Jerry, I mean, but just to throw this out, I mean, there is an awful lot of money flowing into insurance in Hawaii. For I think the governor cites repeatedly that the insurance companies collected $36 billion over some period of time and only paid out like 14. 14, okay. Yeah, you know the number. Say that back to me. So what did the insurance companies pay over those years, and how much did they actually pay out in losses?
Yeah, so specifically for the property and casualty market, over a 20-year period, they did collect $36 billion in premiums, pay out $14 billion in claims. Obviously, they have operating expenses like any other business, rent and paying staff, people to collect those premiums.
70%.
It actually is quite high. On the industry-wide, now Hawaii tends to run a little more profitable than some of the other areas. Some of that is because of the hurricane risk and us not having to pay out claims on the hurricane side. But overall, typically an insurer will actually almost break even on that part of the equation, but it's the funds that they can then invest. And so if they have a profitable and net investment income, that's kind of where they can make their profits. But overall, you'll see in the property and casualty market what we call a loss ratio of around 100%. In other words, they're actually, their expenses and claims matching up with their premiums is almost even, but they're making their profit off of the investment income.
So go ahead, yes. Go ahead.
One of the things that I think we've been talking about a lot is reinsurance too. I mean, you're talking about overhead, you're talking about rent and things like that, and that does cost a lot, but reinsurance is such a huge chunk. Jerry, do you have any insight into that? I mean,
I don't know how much. It has increased quite a bit. So I think before what I've heard was it was like, you know, the reinsurance cost has gone up quite a bit, where maybe it was about 20% of the overall claims and expenses, and now it's up to 40% of the overall claims and expenses. So that reinsurance cost is at least doubled.
But as far as the amount of perceived windfall that insurance companies are getting, I mean, how much of that is taken up by their administrative expense of having reinsurance so that they can issue policies?
Oh, a significant amount. So yeah, I'm not saying.
We're getting a little technical. I just want to, and we're almost done, to let you guys know. So, but I just want to, I like that question, because I think the average person is going, insurance companies make a ridiculous amount of money, and they charge us whatever they want, and it's all out of control, and they're forcing old ladies out of their apartments. I mean, Scott, Matayoshi, I'm going to put that to you. You know, is it impossible for the state to take at least the front-facing insurance companies out of this, buy our own reinsurance, and still take care of our people?
I think it would, again, run the risk of bankrupting our state if a hurricane just smashed into one of the islands. We would be taking on all of that risk. Now, we can buy reinsurance, but in order to buy enough reinsurance for the entire state, that would be an incredible sum. I think what it really comes down to is, do you trust the state to do something like that on that large a scale efficiently? I'm part of the state, and I'm not sure I can honestly say yes to that question. But the state is entering the market by standing up HHRF again, by standing up HPIA, giving them for a portion of the market. So we are stepping in to try to mitigate some of those risks. We are stepping in to offer people basically what amounts to a state-run insurance option. We're just not taking the entire market and all of that risk in that market onto ourselves, because we cannot justify risking the state like that.
Okay, well, thank you very much. A very enlightening show. I appreciate it. Mahalo to you folks for joining us tonight. And we also thank our guests, State House Representative Scot Matayoshi and insurance agent Alex McLaury, Acting State Insurance Commissioner Jerry Bump, and from the Kokua Council, Greg Misakian. Next week on Insights, fish is a central ingredient of local cuisine, but do you know where the raw ahi used in poke bowls or sushi comes from? We'll take a closer look at the push to identify the origins of the fish we eat. Please join us then. I'm Daryl Huff for Insights on PBS Hawaiʻi. Aloha.
Local broadcasts of Insights on PBS Hawaiʻi are made possible by the support of viewers like you. Mahalo, and by Carl Smith Ball, providing legal services throughout Hawaii and